Thank you very much, Andrew. Thank you for the kind introduction. Hello, everyone. 大家好. I'm Mark Teng from Credit Agricole, and with me today are Kenneth and Shin. When Andrew asked me to moderate this particular panel or interview these two gentlemen, I felt that this was an extremely unique opportunity because I'm usually on the other side. But not only am I doing the interviewing today, it's not every day that you get to put your ex-boss under the spotlight and ask him whatever you want. So without further ado, maybe a quick introduction, although I don't think any introduction is necessary. Kenneth, obviously, a near and dear friend from Credit Agricole, who has fostered and developed that franchise over the last 35 years into a leading shipping bank in Asia for the shipping industry. In 2023, however, he left us and established SeaKapital, a ship leasing specialist based in Hong Kong, and where he is now the founder and CEO. He is also a member of the National Committee of the CPPCC, which is something that I will try to revisit during the course of this conversation. With us also is Shin Man, who's also an industry veteran, first starting out in CMB Financial Leasing, covering mainly the Greek and UK clients, before moving to Ritz-Carlton as the managing director of the investment banking division, and now the general manager of the business development and operations department of Seacon Shipping. So I think the first question that I'd like to pose to my interviewees is that, well, we all know Seacon is a Qingdao-based, the largest ship management service provider in China, the fifth largest dry bulk shipping company in China, and SeaKapital is, as I mentioned, the ship leasing specialist based in Hong Kong. How did the two of you come together and decide that to form a joint venture, which is not as often as we like to see in the shipping industry?
Well, thanks Marine Money, to give me a chance to speak, under another capacity. So for the last 30 odd years, I've been wearing the Credit Agricole hat. So from last year, many of you know that together with Sabrina Chow, we are co-founder in SeaKapital, and with a group of very supportive shareholders, we are up and running. So SeaKapital based in Hong Kong, and we are the ship owning and leasing company. I think what I want to give this background, because it's important to understand, why the Seacon ourselves, would fit. We are actually quite flexible in our business model. We can do both finance leases and operating leases. We want to do the right deals at the right time. So besides the business model, we are flexible in looking in all kinds of popular type of ships. So we combine our all along the expertise in terms of running ships, identifying the risk factors in terms of investing and managing ships, and try to build a robust business model whereby, as a leasing company, it is going to be the yield play plus equity upside. I can go further into that. So when after we started this company in the early part of 23, and I must confess, before this, I really didn't know the principles of Seacon that well. But what has been very impressive, from my point of view, is that a Chinese-based company started themselves in Qingdao, and then building further businesses and the ownership activities in Shanghai, and in the middle of COVID, has the ambition of moving to the Hong Kong to go through the trouble of listing the entity there and making use of the legislation, making use of the Hong Kong platform. That's which I will also say I've been very close to the Hong Kong government in making sure that Hong Kong has the tax, legal, and regulatory stability to build a business. But especially during the COVID time, people really do not see all these advantages, that easily. But as a private company, they would come and invest, in Hong Kong. So we got to know each other a bit more, and then we find that we have a lot in common, starting with the human chemistry. I think we treat each other with respect, and then we are also very humble with our knowledge, also very generous with our knowledges. I think the most importantly, if we look at the Seacon's business model, I'll let Shin speak later, but the way we look at it, maybe at the risk of generalizing the situation, Seacon has been a ship owner, but they started as a ship management company. So they come with a lot of ship management expertise. So they are interested in ship owning because they have the ship management expertise. That is their roots. So for us, SeaKapital, we are interested in ship owning because we would like to provide capital into this capital-intensive industry. We always provide a layer of capital to make things work, and we are flexible. And so is Seacon. So I think the starting point is good because we have we started coming in with different type of expertise, and also the experience may be more China-centric and expanding, and whereas our experience may be is more international, and then moving closer and closer towards the motherland. So I think we have a lot of expertise, that fits. Especially there's a lot of good chemistry, and I think that was the good start. So maybe I should rest here.
Thank you, Kenneth. As the joint venture with Seacon and the Continental Kapital, well, if we consider, because Seacon has a lot of business in shipping, like technical management, third party, and ship owning, and we do operations, and then we do equity investment. So as a ship owners, it's really like a dream come true to have a joint venture with one leasing company. So which means you have a lot of projects that can be carried out a lot easier. But however, the real meaning is not like what it is sees as a ship owner and joint venture with a leasing company. Is we actually is a strategic partnerships with SeaKapital, because SeaKapital has a unique business model here, different than a lot of leasing company, which I had the experience with. Because when we talk about leasing now, either operating lease or we go finance lease, we still are very far away from our assets. And this is one of the key things that very typical, very critical at this market. When the market going very high on the high rate for sometimes, and people starting to concern about how long this market going to go for, and one leasing company is trying to take more control on the risk, which is firstly to deleverage and using a lot of other securities, additional securities in this market. But what we do with SeaKapital is we acting as a kind of a securities tools for SeaKapital from Seacon's business model, and helping SeaKapital to within buying more assets and investing a lot more ships, and to have a hands-on technical management, which is also in-house technical management, which take care of the assets a lot more, and then to hedge the risk in the future if the market downturn comes.
Well, thank you, Shane. Thank you, Kenneth. I think we heard a bit about the internal synergies that's coming out of this JV, including the access to technical management for Seacon on the Seacon side, and also, of course, the risk profiling skills and expertise that SeaKapital brings on the leasing side. But what about some of the external macroeconomic or politically or government policy? Maybe if I ask Kenneth to put on his CPPCC hat, what can you comment a little bit about what's happening in Hong Kong and also a greater context on the macro basis that pushed this JV to come along?
Well, I think it's a fact that China is a very important maritime nation from all angles, but especially in terms of its demand of seaborne trade. I think we are at a era whereby China, after a period of maybe not expanding its fleets due to a number of reasons, it's also time to look at the longer term strategy in terms of how to strike a balance in terms of having the own fleets, chartering fleets, or versus a third party fleet in a very interesting world. And then when China looks into Hong Kong in this maritime industry, so what is Hong Kong providing that would help? Hong Kong is very uniquely and luckily the only place in China that practice common law, which is the language for the shipping. All our contracts are done in common law. And in case we got arbitration disputes, it's all in common law as well. And Hong Kong is also the free port, free flow of currencies. And I think throughout the day, we have heard so much about the use of US dollar as the core currency for the industry. And now adding the inevitability that other currencies, especially RMB, before and after the internationalization of RMB, how this is going to play a part. It will come slowly but surely. So Hong Kong is going to play a part as well. So I think in this context, there are a lot of advantages and synergies with the financial market in this very capital-intensive industry. And if I may, just without going too deep, into certain policy, but in Hong Kong, you've also been hearing, the emphasis that's for the states. I mean, it has been since the 13th five-year plan, 14th five-year plan, but it has been also re-emphasized, this year by our state leader that Hong Kong is the international finance, shipping, and trade center for Hong Kong and for the rest of the world internationally. So what does that mean is, in this very capital-intensive industry, finance and shipping goes hand in hand. And I think there's also the important emphasis, on trade, the commodity traders, the cargo owners. Perhaps it's also a part that Hong Kong has to develop and attract more, so that these three attributes are going to grow together collectively. I think this is in this kind of angle that Seacon ourselves thinks that we have a lot to offer. And also we can get a lot of help, being based in Hong Kong, expand our business, in the mainland and internationally.
So I do, because we do a lot of operations, and we have actually getting in touch with a lot of local Hong Kong-based ship owners as well. And we actually feel that although that a lot of our SPVs from our leasing company nowadays are either open in Tianjin province and Tianjin city in the free zone, and also in Hong Kong, but still there's a lot of restrictions, more and more restrictions to have SPV overseas now, even for a lot of large leasing houses. So for us, I think Seacon as a third-party management, third-party managers managing over 200 ships, to be internationalized, very, very important. So to give this this kind of a signal to our clients or to a lot of our partnerships, that friends, counterpart, to know that we are not only limited as a Qingdao-based Chinese ship owning company or technical managers, and also which is an international company, and which we are also has based in Athens, Germany, and in Houston, and in Singapore, and with SeaKapital in Hong Kong.
Great, thank you. Maybe taking a deep dive into the JV, can you talk a little bit about how's the operations split between the two shareholders? You have your ship finance activities, obviously, ship management, operations, technical and commercial. How is that operation split between the two entities, and also in terms of decision making, both on the day-to-day work and also at the board level? How is that coordinated between the two of you?
Well, I would start by saying that the cooperation, the communication is very fluid in terms of we have very regular dialogues. Of course, Continental Capital, our 50/50 joint venture, we have all the proper governance, as to when we're going to have a board meeting, shareholders agreement, things like that. But we go, I think our regular dialogue, go a lot deeper in that than that. Is that, whenever we have opportunities, we try to discuss with each other quite very openly. We are not doing everything, for sure. And for things that we want to do, we might not be doing, a lot of those as well, but we keep exploring ideas. But in general, just like what I mentioned, so I think I can share this freely. So Continental Capital is the asset holding company, 50/50 owned by the SeaKapital and Seacon. And so it's the asset holding company, and then within the company there is the management, the ship management company function has to be seconded to the Seacon very naturally under a very transparent ship management contract, and also I'm very thankful to the Seacon side. They will leave also the finance management side, for SeaKapital, as under also a dedicated contract. So everything is done very openly and transparently and utilizing each other's expertise. But I mean, this sharing of work doesn't mean that we do not look into every aspect of our investments together.
Well, I think I'll split the answer into two parts. First is about like the passive investment we've done, which is like normal leasing projects like finance or operating lease. And as I said from the beginning, that Seacon helps in this kind of structures to have more hands-on management on the assets. As the first part. So also we are, as a Continental Capital, this investment company, we also have some active investment, which is sourcing for new projects or greener projects, and which is can bring say cash flows to our shareholders. And thanks that from the SeaKapital side, because has Kenneth himself and then has not networks in and a lot of friends in the industries, and also they have very strong raise equity abilities in a lot of projects. So which we are trying to help a lot of the equities when they decided to invest in shipping, and to give them advice what kind of a project to invest in, and then also to make the project right first. Because maybe someone is new to the industry and wanted to join this market now, they probably is looking for example, very early slots in new building, and we usually give them a lot of advice, say what kind of yard you should go, what kind of yard should not go. And eventually a lot of our clients, maybe they choose to go to private yard, and then we have our own technical team as the supervisions and everything. We'll help them along. Although they're building a private yard, but we help them to control the risks of choosing the yard and having along the new building progress. Eventually, and then we help them to looking for refinance for the project. So we do like everything as a project, package projects.
Okay, I really like what Kenneth said, that you can't do everything, and you have to choose the right project, as Shin said. So how does Continental Capital look at that? I mean, we are at the upcycle, and interest rates, according to our economist friend, Stan Chott, is expected to stay a bit higher than maybe we expect. So how do you look at the best way to deploy capital under Continental Capital?
Well, I mean, we start with having our investment the criteria. So as mentioned, is the yield play plus equity, the upside. So for the layer of capital that we would deploy, so under today's environment, firstly it would have to make sense. But I think we are using our the usual skills, in terms of assessing the investment, whereby when we are seeing that we are in probably in a cycle when the asset prices are not that cheap. So on the finance lease side, because we do not take full asset risk, that is something that we can combine our knowledge, counterparty risk, how to manage cash flow, to do those, on a continuous basis. On the operating lease side, then we just have to identify right projects, hopefully combined with employment cash flow that can mitigate the risk and make sense, even under today's environment. So I think we just have to. It's no different, from any other time, whereby we invest, right? I mean, as bankers, we always do deals, whether the market is high or low. But I think also as ship owners, if you are just concentrating on asset play, so you would rather buy low, and then you wait for the market to be low, or you wait for a market that makes sense to give you the cash flow to continue the business. But what we're trying to do is to combine finance leases and operate leases so that we can continuously generate transactions.
And I personally think that at this very typical market now, live long is I think that's the key and the top thing we consider for any of our investment now. So, but it's a good timing that because since the U.S. Interest rate has been on the high side for quite a while now, it's very good that at this point of time to secure some long-term cash flow as a time charters or a COAs, things like this, which can effectively give you this result of the high interest rate. A fixed time charter rate will help a project to depreciate and then to give you a yield play, a reasonable return, and just don't have to be too aggressive at the moment. But we have to live with this very high price of the ship price for some times. But make sure every high price of the ship we bought is secured with some cash flow. I think it's the most important thing now.
Well, thank you. And time flies. I notice we're slowly running out of time. So maybe as a final question, in Chinese we say 有危才有机啊. With crisis comes opportunity. What do you see as the most pressing crisis in the shipping market today, and how do you take advantage of that? And well, where do you see Continental Capital in the year 2030, perhaps?
Well, it's I think we're starting from the risk, not the luck side. I think that because I'm also following when I was listening, also following the elections result. I think the first thing we have to face is who leads the elections, which I think they will have a large, impact on the whole shipping industry, because as we know that there's a couple of war fighting around internationally. So shipping has been benefit from this indeed. But however, none of us are war people, so we think they will eventually go to peace and to the entire world, and the shipping will eventually return to its original price and everything. So I think in the future I see Continental Capital and our joint venture could be a very kind of a popular and then kind of have a good reputations on the market as a very special leasing company that has a technical in-house, which have a lot of the management capabilities of our projects.
Well, I think we have to look at the whole situation, always very, very humbly. And looking at the fundamentals, bad markets is always created by oversupply in shipping, and that oversupply situation will come. We don't have it today, but as some of you have seen, in the presentation, for example, on the tanker side, right? In end of 23, the order book is 5-6%, and right now, it's in double digits. Things can happen quickly, but I also happen to think that the ESG would, and also what has happened, between 2008, to quite recently, people do have memories, how to manage, a shipping risk. But I think the last parting thoughts, especially what we are in the finance forum, is that what I like to say is that for the ESG, the movement, we just hope that the trajectories, the targets, would be simple enough for people to understand, so that that would not drive away good capital from the industry. We don't see a problem with capital at the moment. But my words for the with Basel IV and on top of all these regulations, for banks, if they think that, or financial institutions, if they think that, it's just too complicated or too difficult, to be involved in the shipping, I think this is not going to be very good for us. And that time is also going to come, with the oversupply, the situation that will inevitably come one day. So I think, we all just always have to be very, very humble in terms of being a long-term player in this industry.
Thank you, Kenneth. Thank you, Shin, for your sharing, and thank you very much for giving us this unique opportunity. We wish every success to the Continental Capital joint venture. Thank you all very much.
Thank you.